Shares of 3M and ADM have both taken massive hits. Now, I'm going to go over both of these companies and why their share prices recently tanked, as well as give you a little bit of a bonus near the end of the video, something you may have been waiting for. First, we'll cover 3M since I do hold a small amount in my YouTube portfolio. You all voted for that, so here you go. Now, my position is quite small, and it wasn't by my choice that we have the stock, but we do. And it just dipped over 10% off the back of an earnings release that basically the earnings itself beat expectations. And my understanding is the guidance now is not what analysts were hoping for. Also, the business is going to be strained for years to come as they pay out the settlements for the earplug lawsuit everybody was worried about. Now, there is some certainty on this, but they're going to be paying out for years to come, and I think the strain on the business is also potentially weighing down this stock. Their dividend growth had already effectively slowed to what constitutes a halt when you compare it against benchmark long-term inflation of 2 or 3%. This 0.67% they posted up last time doesn't really cut it, in my opinion. So, in terms of their free cash flow, they're paying out roughly 2/3 already on that dividend. And if you account for how much they're going to have to pay out for those lawsuit settlements, it doesn't really leave a whole lot left to do things that would drive additional value to the shareholder, such as share repurchases, perhaps acquisitions, improvements to the business, debt pay down, anything like that. So basically, their ability to actually drive value to the shareholder, even though the stock might look cheap, is really going to be impaired quite a lot. While the stock is trading cheaply compared to its free cash flow, compared to how it normally trades, I think a lot of this is just the market pricing in how much they're going to be squeezed by paying out those lawsuit settlements. So you have to ask yourself the question, is it worth picking it up at this price, knowing that they can't really take that much advantage of it? I think coupled with the fact that analysts were expecting 2024 adjusted EPS to be in the range of $9.90, and 3M in their earnings guided for a range that tops off at $9.70, it starts to feel more like a cigar butt investment. So here's the tricky part, because it comes down sort of to opinion on the future of 3M. But I do think, yes, it is very easy to justify today's price for the stock, okay? These numbers are not completely out of line. We're using a 10% discount rate, assuming the midpoint of management's earnings guidance. I picked a number that was somewhere in the middle. I believe it was 930 to 970. I went with 950. And okay, assume low single digit growth in their bottom line, which again, I think is something that 3M could accomplish. I don't think that's, necessarily too optimistic. Okay, you get $100 in fair value. But the thing that I think about is, am I more likely to be positively surprised by 3M in the next few years, or negatively surprised? By that, I mean, do I think that any unexpected events that happen with regards to 3M are more likely to add value for shareholders or subtract value for shareholders? I think that the lawsuits that they've had in recent times and that they've settled have shown a propensity for negative surprises for 3M. And while any company could be vulnerable to litigation, it seems like 3M is especially vulnerable because they are in so many different things. They are, as some people call them, the everything company. And it seems that we're seeing lately the dark side of that fact. So, because of that fact and because of the low growth, I would want to use a higher discount rate personally. Next up, we have shares of Archer Daniels Midland, or ADM, which is down over 20% on the back of what's being called an accounting scandal. So, every publicly traded company has to report numbers, they have to be independently audited, and basically, if there's any shenanigans afoot, it's very likely that the SEC will get involved and investigate the matter because, again, these are shares that are sold to the general public, and it's under the assumption that the numbers that they report in their quarterly filings are accurate. Basically, the concern with ADM is maybe the CFO was kind of cooking the books to make things look a little rosier than they actually were. As he has been placed on leave, the SEC is investigating the matter, and they have actually trimmed their 2023 fiscal year guidance. Now, the question is, how deep does this problem go, and what business segments does it actually impact? Dividend growth investors have loved ADM for its respectable starting yield, low payout ratio, and aggressive dividend growth, as well as being in an industry that seems like it's pretty durable, as in agribusiness. Is agriculture going anywhere? Probably not, as long as humans need nourishment and sustenance to exist. So I can understand the appeal of the stock. Now, and perhaps rightly so, some dividend investors are questioning, well, is this really as sustainable as it looks? Can they actually keep up this level of dividend growth in the future? While I certainly don't want to necessarily downplay the severity of accounting shenanigans potentially happening at a publicly traded company, I do want to offer a little bit of perspective and a little bit of opinion. The numbers put out by publicly traded companies are generally audited very carefully by a third-party accounting firm, and I would think if these problems were wide enough to threaten this dividend, or if they had been going on for a very long time, it's pretty likely the auditors would have smelled something before now. So my guess would be that it's probably relatively short-lived and minor in the grand scheme of things, though still a major concern. At the end of the day, it does look like one would have to beat up ADM considerably to get today's price. I decided to include the balance sheet because it does seem like that's a substantial part of their value as a business, but I did apply a 15% discount rate, which is pretty massive, and a negative growth for the next 20 years on their earnings, which still gives us a value of about $69. However, I think it could be some time before this price recovers because the cardinal rule here is once you have broken trust in the numbers, it's really hard to put faith in any predictions about those numbers going forward if you can't even trust what the company's giving you. And that trust will be very hard to earn back. At the end of the day, not long ago, both of these stocks were pretty widely praised and loved and cheered in dividend investing circles. However, now that perception has seemingly started to shift, and that just goes to show that just because something is highly praised and loved within an investing community doesn't necessarily mean it's the right thing to get into. Now, if you consider yourself a value investor like I do, you might also be just taking a side eye at these numbers and saying, hey, 3M and ADM both still pull in a lot of money regardless of these issues that they're having right now. And this could be an opportunity to buy a lot of cash flow for a pretty discounted price. But it's difficult to be that person that's looking at it that way when a company falls out of favor, and it's easy to buy when they're more popular. Before I move into my special announcement, be sure to let me know down below if you think 3M or ADM represents a value currently. So, on to the special announcement. As many of you know, I have a pretty substantial position in Medical Properties Trust, and I cover the stock extensively on the channel. Lately, I've been brushing up on my research regarding some legal actions that have been taken, namely the lawsuit that MPW filed against short seller Viceroy Research last year. I believe that this has been touched on a number of times and referenced a number of times, but hasn't been closely covered a lot on YouTube. And as I've been reading up on the particulars, I'll just say it really opens up a can of worms, and I can't wait to do a video that's a little bit more in depth on this subject. Unfortunately, the wheels of justice do seem to move rather slowly, but I found some fascinating things when reading through their filings. Honestly, it's some of the most aggressive stuff I've seen in writing against short sellers since the days of me browsing Wall Street bets during the whole GameStop and AMC popularity back in the day. Here's a little teaser about what's in this filing. This is Viceroy and Paring's documented history of dishonesty and fabrication, according to the filing submitted by MPW. And it says, before crowning himself a, quote, grand poobah of short selling, Paring was a social worker in Lincolnshire County, England. He resigned after the Health Professions Council, a public regulatory body for social workers in the United Kingdom, investigated his failure to notify a young child's aunt and uncle before recommending that the child be put up for adoption. A recommendation that, had it been accepted, would have had extreme consequences for the child. The council found that Paring subsequently created false records to cover up his significant failure and then threatened to refer his manager to police. So what it seems to me is that a lot of the negative research about MPW that's being spouted and driving down its share price is being basically disseminated and originating from a failed social worker with a dubious relationship with the truth. At least that's what I'm inferring from my reading of this document. Let me know if you'd like me to make another video that sort of covers this document in a little bit more depth. Thank you for watching and making it to the end of the video. If you like content like this, I suggest you subscribe to the channel, hit the notification bell, like it to help me in the algorithm, and also join my Discord, link in the description. Follow me on X or Twitter, whatever you want to call it, at Mr. Macho Mog, and consider being a channel member and supporting me financially. Take it easy, everyone.